Hey, good afternoon, everybody. Welcome back to my YouTube channel. I am Cornelius Camp of CorneliusCamp.com, school counselor by day, real estate agent by night. Before we go further, if you are not a subscriber, first, shame on you. Secondly, stop what you're doing, hit the subscribe button, become a subscriber. My channel consists of any and everything real estate related. I talk about real estate marketing, marketing trends, lead generation, social media strategy. I talk about real estate trends. I talk about real estate news in different markets. Mostly, sorry, I can't talk. Mostly the Chicago market because that is where I currently practice. But I do go into discussions about other markets around the U.S. and then sometimes I even do globally. And then I also talk about real estate experiences. I've been practicing for about 5 years, so I share some of my experiences that I have gone through or currently going through. But then I've also had the luxury to work alongside some of the top producers here in Chicago. So whether it be from me having a cup of coffee or being involved in the same transaction, I have gathered some experience, advice, wisdom from them, in turn used it to my career, and then in turn I want to share it with you to maybe help you out in the situation that you might be going through. So that's what my my channel consists of. And again, hit the subscribe button and I hope you enjoy it. Today's video, I want to discuss something that's very can be sensitive, and it's very important that you all understand the topic that we're discussing. Is the topic of foreclosures. And foreclosures, if you have not gone through it already, I hope you don't have to go through it. But if you're an agent and you're helping a client, that possibly may be going through it, or someone that you're helping and you want to talk to them about it, or they may have asked you some questions, it's just foreclosure is just something that you want to try to avoid. Everyone wants to avoid it. The buyer or the owner rather, the bank, they don't want any houses to be foreclosed on that they are involved in. It's just a no-win situation for everyone, except for the buyer, the future buyer of the property. A lot of investors buy foreclosures and they make a killing off of it. They buy the house or the property very cheap. They go in, they do a lot of rehab work, and they end up flipping it and selling it back on the market for regular value of what it was worth before foreclosure, or they may be able to make a nice little profit off of it. So that's the only person that really benefits from foreclosure. So you want to try to avoid it if at all possible. And today I'm going to talk about 5 things to help avoid a foreclosure, in case you are going through that particular situation. These are in no particular order, but these are the 5 things that I think about when it comes to when I discuss the possibility, hopefully it won't happen, but the possibility of that with my clients. You never know what could happen. You might fall on some hard times. You may have medical bills coming, and it could just be an unfortunate situation. So number 1, you can either rent your home or you can sell your home. You can do one or the other. Probably the easiest and probably the option with the least amount of headaches would be the selling of the home. And you just do a traditional sale. You hire an agent like myself. You talk to them. They run some comps. You come up with a price. You list it on the MLS, and then hopefully it'll get sold. Hopefully you have a nice buyer come in, and hopefully you can make a profit so that you can pay off the loan that you currently have, and then maybe use that money to start a nice little savings. I wouldn't jump right into it if you're being forced to sell your home. I wouldn't jump right into another house, but I would take that time and maybe knock out some other bills that you won't have to worry about the next time you do get a mortgage. Or if you decide to go the rental route, you can do that as well. But I would strongly discuss, or strongly examine rather, my financial situation before I went the rental route. It can get very taxing. It can get very tricky, if you are not in the right situation. And what I mean by that is that let's say you decide to go the rental route and you go and find another place to live that you have to rent out. And so now you run the possibility of maybe 1 or 2 months and you have to pay double of everything. You got to pretty much almost pay a double mortgage. You got to pay double on the electricity bill. You got to pay double on the heat bill. So things like that. So that can be very taxing and can be a lot worse than if you had actually stayed at the place that you are doing the foreclose on. But it can be a little rewarding because if you have a nice property and you are in a great market, you can rent the place, snap of a finger, and sometimes you can rent for more than what your current mortgage is. And so after you take care of all the monthly bills and so forth, you may have a little bit of change left over, and you can start applying that to a savings account or applying that to the principal in your current mortgage payments. So it could, actually could work out for the benefit of you if you're willing to deal with the headaches of being a landlord. It also could work out if you have somewhere else to go and you don't have to worry about that double mortgage. If you have a family member or a friend who might let you shack up with them for about a year to kind of get you back on your feet, to kind of get you out of the hole that you dug yourself in, that could be beneficial as well. All right. So, again, you either want to rent the home or you want to sell the home. Secondly, what you want to do is you want to, well, first, I should have said this earlier. I apologize. Before you do anything, if you feel like you're about to go to a foreclosure, you want to contact your lender ASAP. If you, and I mean ASAP, meaning like if you missed one payment, you've missed two payments. If you've missed two payments in a row, you need to contact your lender. Just like I mentioned, no one wants to go through a foreclosure, so they may have some programs set up to help you with the foreclosure process, or how to avoid the foreclosure process. So that was a little disclosure what I should have mentioned earlier. But what I was saying, number two, forbearance. When I think of forbearance, I like to kind of use the analogy of a student loan. You go to college, you have to take out student loans, and then you graduate and you have to pay those student loans back. And unless you have some outstanding career, you're not going to be making much money straight out of college. So your student loan payments are going to be very, very difficult, and they're going to be very, very expensive. And you might be able to make the first year or two, but then you may start to realize, once other responsibilities come in, you may start to realize that you can't make a $700 payment on your student loan. So you contact whoever the company is that gave you the loan, and you go into a forbearance, and that's basically putting a hold on your payments. So you just totally stop what you do, and you will contact your lender, and you guys will come up with a time frame, a time period, and in that time period you have to make up whatever you are owed to get your loan up to current status. And you do the same basically with a forbearance on your mortgage. However much you owe, $2,000, $3,000, you come up, or you meet with your lender. You guys come up with an agreeable time period to try and make up the negative amount to get it back up to current status, and you guys agree on it, and you take it from there. Okay, this forbearance is more so along the lines of a temporary fix. So 3, 4, 5, maybe 6 months. That is definitely not something that's going to continue to help you, because once that time period is over, whether you have made up the difference or not, you're going to go back into paying that mortgage at the same price as it was when you went into the forbearance. Okay, so if you couldn't afford it then for whatever reason, you might not be able to afford it right now once the time period for the forbearance is over. All right. So that was number two, forbearance. Number three, a repayment plan. Again, that's something that you would just go and talk with your lender about. And the way a repayment plan works is that if your mortgage is $750, but you're behind rather 5,000. Okay, the amount of payments that you've missed, you are behind $5,000, and you meet with your lender and you guys discuss another time period where you can use that to get back up to current status. And so let's say let's say it's 18 months, and you owe $5,000. Well, you divide that into months, and you take that amount and you add that to your monthly pay mortgage. So instead of 750, your mortgage may end up being 795 or 815 or something like that. whatever that number is that's added on to it, you continue to pay that amount for the particular time period, and then that gets you caught back up to current status. That's really the main thing, is to try and get you caught up to current status, and that's going to help you with avoiding the foreclosure. All right. Number four, you either will go through a loan modification or a refinance program. And the refinance program is, you can actually shop around for that. It's just like taking out another loan. You have to have had some equity built up on your home, and you have to have a good credit score to do a refinance. But I say shop around because, like I just mentioned, it's like another loan. So you're more than welcome to go and look at another lender who may offer a lower interest rate than what you currently have right now. Um, so that's very, very possible. So I would suggest to do that if you are choosing to go this route. The loan modification is basically what it is. You're modifying the current loan that you have. So if you're paying 5% of your loan and it's 15 years to pay it off, well, to modify that loan, you may stretch that out to 30 years. Okay, so obviously that's going to decrease your payments probably by half. All right. So that's going to help you out a lot more. That's what you do with the loan modification. The last and final thing that I want to discuss, and I save it for last because I can't express enough how you want to exhaust all of your options before you come to this. And there are some other options that you can use to avoid foreclosure. So you make sure you can research and use those, or if you want to know more about it, just write me a comment, and I can check on that also for you. But the last thing is bankruptcy. You really want to avoid that at all costs, because that's a big eyesore on a credit report when that shows up. It's a big red flag. It's unavoidable, and it really sucks. It puts you in a very, very bad situation for I think it's 7 years or something like that, maybe around 10 years. But you end up, it really, really hits your credit score really, really bad. um, you can't take out a loan even if it's a car loan. So don't even thinking about going to get another car, or going to get, maybe you came into a rental property that you want to buy. Don't even think about it, because that bankruptcy comes up on there, and it's an automatic red flag. I mean, I even see it in my business when I do rentals sometimes. The landlord might be lenient with the credit score. He might take like a 650 or something like that, and we go to run the credit report, and if that bankruptcy comes up there, it's almost like, nope, I don't have any favors for it, because they just something that they don't want to deal with. But basically, what you do is that you take a medical, your medical expenses, if you have those, your student loans, if you have those, any other expenses that are just piling on top of you and taxing you down and so forth, and you file bankruptcy, and it sort of just wipes it out. So if you have like medical payments for $400, student loans for $600, that's a total of $1,000 that you just wiped out for bankruptcy. So you can take that $1,000 and you can add that to make the mortgage payments on your current home. But it sounds great, but again, with that, it comes a price of having a horrible credit score for the next couple of years and having to dig your way out of it. Um, Even to the point where if you apply for a credit card, the interest rate is going to be so sky, it's ridiculous. All right. So those are the 5 things that I wanted to discuss. Again, rent or sell your home is number 1. Number 2 is a refinance or a loan modification. Number 3 is to a repayment plan. Number 4 is a forbearance, and number 5 is bankruptcy. Okay, so I hope you all enjoy that video. Like I mentioned earlier, if you have or know of any other avenues where you can, or any other tools where you can use to help avoid foreclosure, leave them in the comments below. Let me know, and then also make sure you like the video and make sure you share it. Okay. Thanks so much for watching, guys. Like always, I really appreciate you listening. I really appreciate you watching, and you guys have a great day. Be safe. Take care.